It's time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you for coming on today.
Thank you for having me today.
Well, yesterday the Bank of Korea cut interest rates by 0.25%. That was, of course, widely expected. What's the response been in the market?
Yes, as you said, Bank of Korea lowered its policy rate by 25 basis points to its lowest level in the last 2 years. To 1.25% in a vote of 5-1 differentials of the policymakers. This was the second round cut in the last 3 months amid the mounting deflationary pressures and slowdown in the economy with the consumption growth weakening, and everybody's worried about the sluggish in the exports, and facility investments are actually declining in terms of YOY numbers. So all that kind of added to the worries about economic growth rate slowing down to below even 2%. The BOK have said that they are expecting now the growth rate will be lower, probably lower than 2.2% projection they made in July. And because of the prolonged U.S.-China trade dispute, as well as the heightened geopolitical risk that we're seeing, the policymakers are saying that there's further room for rate cuts. The Kospi kind of moved quite strongly yesterday, but today it fell by more than 0.4%. The market in general seems to be taking some breathers because that the rate cut is definitely positive news in terms of the liquidity, but everybody seems to continue to worry about the economic growth rate slowing down to even below 2% rate.
Yeah, taking a breather here, taking a breather in Wall Street as well, it seemed yesterday. But overall, a good week in Wall Street pretty much. Now the Nikkei in Japan is sitting at its new high for the year. So what's the story in global stocks?
Sure. As you said, the market took some breather yesterday, and U.S. fell slightly by, for the Dow, 0.08%, S&P down by only 0.2%, Nasdaq was down 0.3%. As you said, the Nikkei was quite strongly showing a rising trend by 1.2% yesterday, pretty much flat today. And if you look at Chinese market, it seems to be one of the underperformers in the last several days because of the whole concern about the U.S.-China trade deal. Overall, the news about the U.S. House of Representatives have passed a bill sought to pro-democratic protesters in Hong Kong that aims to defend civil rights in a semi-autonomous territories. That basically, kind of angered the Chinese government. So people are continue to worry about the U.S. versus China in regards to these political issues as well as the trade issues. I think that the U.S. continue to ask for China to provide some ways to keep the intellectual property rights, as well as opening up the financial market. It seems that Chinese government is actually definitely opening up these market as well as trying to move in the right direction, but nevertheless, the process seems to be fairly slow, and that is kind of putting some concern about the U.S. And U.S. is continuing to put pressure to China. As long as this fight between U.S. and China continues, everybody's concerned about the economic recession that might come for global economy. In our view, though, the policy decisions and the agreement on trade side will happen before the end of the year because both head of the countries are concerned about the election that's happening for U.S. Trump and for Xi Jinping, the social unrest that's happening in Hong Kong as well as Xinjiang area.
And briefly, before we go, the Fed's new Beige Book is out. What's in that report, and how does that influence the markets?
Right. I mean, basically, U.S. economy seems to be slowing a bit, but it's not to the extent that it's going down to the recessionary territories. The Fed is saying that they're kind of downbeat about some of the regions of the U.S. economy, but nevertheless, the growth seems to be still remaining fairly reasonable. But some numbers are coming out in terms of retail sales numbers, and all these PMI numbers are showing slowdown. That's definitely happening for U.S. That's why I think the Fed will move preemptively, continuously, and probably cut another rate by end of this month.
All right, Mr. Yu, we'll have to leave it there today. Thanks so much for coming on.
Thank you very much.